Now, the Trump administration's top economic officials are set for a second day of talks on this Friday in Beijing after what the White House called a positive start to negotiations. Let's go over to Beijing. Our China correspondent Tom Mackenzie is joining us for more. So, Tom, it seems like we've avoided some of these nasty headlines in day one. How do you think these talks have been progressing so far?
Yeah, so far we've avoided the nasty headlines, but that's largely because we haven't heard from the US delegates or their Chinese counterparts. They refused to talk to the media when they returned to their hotel last night. What we have heard from, though, is Mark Calabria. He is the economist for Vice President Mike Pence, and he said, as you've pointed out, that they feel the talks have started off fairly positively. He also said that the US delegation came over here with a list of asks for their Chinese counterparts. Among them, he said, were demands to reduce tariffs to be on an equal footing with the levies imposed by the US, so that China would then be pulling in more US imports. We know that the US delegation, we've heard from the likes of Mnuchin and Ross over the last few days prior to these talks, that they are also focused and concerned about the forced tech transfer that they say is happening here, and they're also concerned about market access. Those are areas potentially that China may talk about in these negotiations. They've said they're not going to agree to reduce their surplus by $100 billion. They said they're not going to agree to withdraw their state support for things like artificial intelligence and semiconductors. But potentially we may get some announcements from the Chinese side around market access and around imports, though likely in the context of policies that we've already heard initiated by the Chinese. Again, the US side in Washington, that economist, Mr. Calabria, saying that it needs to be about implementation and delivery from the Chinese side. That's at least how the US view it.
Tom, the U.S.-China trade gap, that widened again in the first quarter. Is that another potential pressure point here?
Well, it is, because it seems to be such a significant bugbear for President Trump. He has been consistent in hitting China over the trade surplus that they have with the US. As you say, it increased again by about $91 billion in the first quarter. And if you think that back in 2017, the trade surplus that China had with the US was around $340 billion, it is an eye-watering number. We've got a terminal chart that illustrates this over a longer time frame. The Chinese, though, would say, look, this is about structural issues and it's also about a low savings rate. They've asked the US to lower barriers to access to US technology. They say that that would help to reduce the surplus. And that is something that's obviously unlikely given the increased concerns in Washington about security and about competition vis-a-vis China and its tech sector. And you've seen that play out with the likes of ZTE and potentially investigations into Huawei as well, the smartphone and telecoms equipment makers. So really this comes down to, does the delegation here in China, the US delegation, are they speaking with a unified voice? Are they going to come back with some deliverables that will assuage Trump and at least delay those $150 billion worth of tariffs that are hanging over these conversations? And that's why it's so significant. Potentially the most positive outcome of these talks will be a timetable, a framework for continued negotiations between these two sides and a dialing down of tensions.